The federal government hailed this week's vote by Telstra shareholders to close their ageing copper network in favour of getting $11 billion from the NBN company and the government. But there's still a fair bit of work to do to make the national broadband network a reality. Another vexed issue that was sorted out this week was the NBN Co's decision to scrap its so-called price shock mechanism, which would have allowed it to increase its prices by 5% above the inflation rate. I spoke to the NBN Co CEO, Mick Quigley. Well, Mick Quigley, the Telstra vote occurred this week, obviously. Overwhelming vote in favour. In fact, they were falling over themselves to vote for the deal with the NBN. Must have made you think that you paid too much.
No, Alan, it didn't make me think that at all. I've said, I think, right from the very beginning of the negotiations that this had the potential to be a good deal for Telstra and a very good deal for NBN Co, and that's the way it turned out. Given the alternatives that Telstra looked at, it was clearly the right thing for them to do, and that's what the shareholders have voted on. And I can assure you and assure the people who are watching the show that this was a good deal for the Australian taxpayer. We've literally saved billions of dollars in doing this deal with Telstra, compared to the alternative, which was building the network without the Telstra infrastructure and then competing with Telstra to go after fixed line subscribers.
Now, one of the things Telstra has been trying to do is protect themselves in the event of a change of government. Now, I wonder if you could clearly tell us, firstly, what happens if there is a change of government in 2013, and secondly, what happens if it happens before then? Well,
we're proceeding with the objective set by our shareholder, the government, and that's what we're working to, and that's what we're building to. Now, of course, if there was a change of government, and if a new plan was put in place, we would obviously adapt to that. And we, like Telstra, have always looked at contingencies. The bulk of the money we'll be spending early on with Telstra will be to build part of what we call our transit network, which has application, very wide application, almost no matter what technology choices you make. Having said that, there's elements of the job we're doing, which is the satellite part and the fixed wireless part, particularly for the bush, which will be committing significant amounts of money, and we will have committed significant amounts of money by, for example, mid-2013.
But what exactly do you expect to happen if there is a change of government?
That's not something we've planned for. We're very busy, obviously executing on the objectives that our shareholder has set for us. But obviously there's going to have to be a level of analysis. It's very difficult for me to predict that because I haven't had any discussions with anybody about an alternative plan at this point in time.
Not at all? I mean, you haven't even spoken to Malcolm Turnbull about what he's planning to do?
No, I can only read in the press the same as what you can read, get a feel for the overall direction, but nothing more than that.
Previously, you've been talking about prices rising at CPI plus 5%, but I think at the Senate estimates this week, you stepped away from that. So what's the new plan?
To be absolutely clear, this is the CPI plus 5% was one minor clause in the special access undertaking which we had in discussions with the ACCC. By the way, that had not been finalised. It was open for discussions. It was just part of what's called a price shock mechanism. It was never our intention to increase prices, wholesale prices at CPI plus 5%. Our publicly stated position and our corporate plan reflects prices going down. So we gave a range of scenarios in our corporate plan, the most common of which, in fact, was keeping nominal prices flat, which means in real terms prices would go down. And if usage, in fact, increased, then we would expect to even decrease prices in real terms. I have gone through an exercise now over the last couple of weeks of trying to simplify the special access undertaking, which my view is it was getting just too complex. And as part of that simplification, I have advised the ACCC that we won't want to proceed with the CPI plus 5%. We'll be withdrawing that clause.
So what will be the undertaking then exactly? Will you be undertaking to keep prices flat?
No, once again, this is a discussion that's going on between ourselves and the ACCC. I can tell you our intention is, as stated in our corporate plan we released last December, but I can also tell you that the CPI plus 5% has been withdrawn. It's not something we wish to proceed with.
What's the starting point for voice, just plain old voice, which is the majority of people? What are they going to pay?
Our wholesale price for a 12 megabit down, 1 megabit per second service up is $24 wholesale.
$24 a month?
$24 per month. Now, the obvious question for that, Alan, is, well, what about these prices? You know, the average price for a voice-only service is around $30, but there are, in fact, some price points in the market lower than that, but they do include call charges as well. What we've looked at is the input costs to a retailer of even providing a voice-only service, and our price at $24, which you can provide obviously a voice service but also a broadband service, but if you even just look at the voice service alone, those input costs are not out of line with what you would pay for a ULL or a WLR. In other words, that's what the type of services a retailer would have to provide now. I should add there is a special circumstance in which some people get a pensioner discount, which means their prices are even below that $22, which is the bottom price. We have allowed for that in the deal that we have done with Telstra. So prices, voice-only prices should not increase.
From where they are now?
Correct.
Is that a guarantee?
I can't guarantee that because I'm not the retailer, I'm the wholesaler. What I can guarantee is we in NBN Co have set the wholesale prices so that those retail prices for voice only should not go up.
Have you worked out what happens if one of the consumers decides not to go with the NBN?
No, I haven't worked it out. The deal we're doing with Telstra means that over the course of time, the copper fixed line network will be retired. Now, for the end consumer, that transition should only provide benefits for them, as we've said, even if they're a voice-only subscriber, but they will get on broadband a better service at prices that should be the same or less, and they have the potential over time to, of course, access new types of service that require much greater speeds and much greater downloads.
Now, to some extent, the NBN is a mechanism for subsidising telecommunications in the bush through a cross-subsidy from the city. And doesn't that make it very difficult for somebody, i.e. the coalition, to come in and sell off or discontinue the city parts, but keep going with the rural parts because they'll be so expensive and unprofitable?
Well, if somebody tried to come in and pick off the most profitable bits and leave the other bits, then clearly there'd be some type of subsidisation scheme required if the government wanted to continue to provide good services to the bush. And the reason for this, by the way, if I can just emphasise again, this network is being built as a public good. It's not being built to maximise profit. The way in which we've approached the network design and the network build is to provide the Australian public with the best possible utility network we can at the lowest cost as a public good. It's not to maximise profits, which is why no commercial entity would ever build this network.
Yes, but the government wants to sell the NBN down the track, so presumably it wants to maximise the return on the sale through profits.
Then they'll need to reset the objectives, I think, and certainly it can't be done in the way we are approaching it, because we are approaching it as a public good.
Really? So you don't think the intention is to sell the NBN in the future?
Oh, that's a different story. If once the network is built and you have a ubiquitous national broadband network which is producing cash flows, that's a different proposition. Then one could imagine it really could well be saleable. I thought you were talking there about a situation in which you try to break the network up in the next couple of years. That's a tough thing to do.
But are you saying there is a point at which the NBN goes from being a public good to being a profitable enterprise ready to be sold?
It can do both. It can be a public good and it can become a profitable asset for the nation and hence could be sold.
Right.
It just can't be. You can't achieve both in the next 2 or 3 years. This is a long-term project. You need to build the network on a national basis, and inherent in that is the subsidy in the bush, in the rural areas, for the satellite service and the fixed wireless service, which it's impossible to make a profit on.
Thanks very much for joining us, Mike Quigley.
Okay, it's a pleasure, Alan.